Okay, so 2 weeks break. Last week was a little intense on the market. So as usual, we'll start with the VIX, where the VIX sits, and then we'll focus on the different stuff I talked about in the newsletter on Sunday. So again, a lot of focus on semis and tech vol because that might be the story of the next few weeks and ultimately the story of the next quarter, I believe, or up until the end of the year. At the moment, very similar to where we've left things off about 2 weeks ago, fixed at around 18 and a half. It's obviously, it feels high based on what happened on Friday, but you look at the distribution over the last 8, 9 months, it's very much mid-range, right? Nothing catastrophic, 50%, a little bit higher than the 50th percentile. The minute you start seeing 19, 20, you can start to consider again putting the trade on. We'll look into this in a second. That's what we did on Friday, I believe. And yeah, we'll look into this in a few minutes. 18 overall, there's nothing crazy when you look at the distribution since 2024, since 24, sorry. It's, I want to say, the long time average or median in VIX. So really nothing to be, too fuzzled about. I know that again, you have some talks around Iran and oil. Obviously, the AI situation, we'll talk about this in a second. But when it comes to SPY at the moment, S&P 500, VIX 18, 19 is not something that we should really be too concerned about. The one that was a little bit more interesting was VVIX. We saw VVIX at 105, 105 plus. It's definitely on the higher side of what we've seen in VVIX over the last, again, year or so. Um, what to make of it? I'm not too sure. I think the market overreacted a little bit when it comes to that. I think anyway we've changed. That's really what I want to confirm over the next few weeks. Was it truly a change of regime that we observed end of June, or are we going back in September with a VVIX above 100 as a default, and then potentially going to 110, 115? We left VVIX building a new regime, I believe, at around 90 average and then hovering between 85, 95. But yeah, like there's definitely some catalyst and some potential to say that we're going back to 100 and 100 and plus. So let's see. I'm not sure next week is definitely going to be the week where a lot of movement are going to happen. You never know, right? That's the beauty of volatility. Things can just blow up at the moment where you don't really expect them. But the next big catalyst on the on the calendar is end of the month with a few important tech earnings, but also next FOMC meeting. And then very quickly we'll start to pay attention to anything that's around um, Jackson Hole, and then last quarter of the year, I mean September, and then Q4, which I think is going to be a little bit more agitated than the summer was so far. Roughly quiet, or not as bad as one could have expected. It's still not great, right? Like when we say VIX 18, we're back into stress regime and stress territory. That's mostly because, well, first of all, realized volatility is back up based on the reading on Friday. So that's the realized volatility we did Friday with the news around Kimi and everything. So that's a decent number. 26, it's not definitely not the highest we've ever seen even this year, especially when you consider what happened in Iran. But 26 is something to start to pay attention to. And overall, over the last 30 days, it's at around almost 14. So my thesis about 2 months ago was I was hoping that realized volatility would collapse to somewhere around 10, even below 10, a little bit like last summer when we saw, I think last July, we had numbers were crazy low, like yeah, 7.5, 8. We're definitely not there. We're definitely not there, and it's very unlikely that we will see any of those numbers. However, 14 and VIX 18, VIX 19 potentially, that's 4 points of VRP, and we should start to think of putting some of those trades on. It's obviously not as great as what we've been accustomed to see, right? We've seen 6, 7, 8 points in the term structure very regularly for about a year. I'm again, we want to see further evidence over the next few weeks and probably closer to September, but I want to believe that those days are gone. And 4 points VRP is what we're gonna get, maybe 5, 6 points in session when the markets start to get really overwhelmed by the news of the day. And therefore, those are situations that we want to capitalize on. That is true as long as you have RV behaving, right? RV14 is not RV10, but I still take that, right? It's nothing crazy when it comes to S&P 500. If we start to see RV again at 16, 17, like what we had about a month ago, right? At the end of June, early July, there was nothing particular in the calendar except continuation of rotation trades, some weird movements, a lot of like movement that couldn't really explain by some clear catalyst. And yet, yeah, you had realized at 17 and a half, 18. That's those 5 points matter when it comes to a big index like S&P 500. I would want to avoid us to go back there. And if we go back there and you have only 4 points VRP, we don't delta hedge. You're exposed to gaps on the way up or on the way down. That becomes a little bit trickier. It's still doable, but 4 points are probably. I don't want to say that I will sit them out, but I will wait to have clarification of where the market is going, but not necessarily where it's going, because I don't believe you can really tell is it going up or is it going down, but what is it reacting to, right? Is it reacting because the Fed is saying something and now that's the new narrative that people react to? Is it moving a lot because again, it's around AI it's AI that is driving the news flow these days. Based on these things, we'll probably want to react slightly differently, I want to say. But otherwise, things are, you still have a little bit of a contango in SPY. It's not terrible, right? You have some stress, but it's not that bad. Especially when you compare to the tech sector, and this is where we let things off. End of June, early July. So the volume, the queues at the time was above 30. It cooled off a little bit, but it didn't cool off to go back to something manageable, right? At around 20-ish. We're still at 26, which is really high for the queues. And again, I insisted on that in the newsletter over the last Sunday, but it's also unusual. The last time you had 26, 27 in the queues was Liberation Day or August the 8th, 2024. So it's moving around. If you look at, I've been roughly back at my desk Thursday, Friday this week, looking at market a little bit more. You can see that it moves a lot. You have those 1% reversal easily within sessions on the way up or on the way down. You have big gaps up or gaps down. It's definitely a rocky market, and that 26 numbers is not is basically reflecting this. Um, what is driving this? It's pretty obvious what's driving this, and it's not just in the US anymore. It's all over the world, especially in Asia. It's mostly SMH and the SEMIS, right? So we haven't looked at that chart in a long time. But this is where implied volatility in the semis, and this is how it has evolved over the last 6 months, a little bit, yeah, 6 months. It's basically a straight line, right? You maybe have a bit of two regimes here that were a little bit more plateauish at around 45, but now a plateauish at 60. The interesting bit here is that implied volatility has perfectly followed realize. It's not like you've had situation where it was great to sell vol. Maybe when you had that plateau here, I remember we took a few positions, but it was very opportunistic. It wasn't something that we tried to harvest on a regular basis, almost week after week, right? Like we did that for SPY for most of it, for most of Q1 and Q2, where week after week we would open position in there trying to harvest those 5, 6, 7 points sometimes of VRP. We even did that on Friday, by the way, here where we had 4 or 5 points at some point when VIX was at 19. Yeah, fair enough. We got into it. You can't really say and do that with SMH. And I know that it's very popular to use metrics like IV rank, IV percentile, and look at this chart and say, well, implied is really high at the moment. So if you sell really high implied volatility, you're going to make money. The market is not, the market can do some dumb stuff, but it's not that stupid, and you have to respect it. So as I said a few minutes ago, right, like implied right now is that situation that sometimes and often people describe and say, well, implied volatility only follows realized volatility. It's not always like this. Again, you have to take that on a case by case basis, on a ticker by ticker basis. Market context matters a lot. But yes, in that case, people are just simply buying options because the risk in the underlying keeps going up and they just want to make sure that they're hedged against that risk. You never know when something can gap up or gap down. We've had multiple cases over the last 2, 3 months. Last week, SMH itself is down 6.5%. It's not nothing. You hear news where I think it's SK Hynix in Korea that was down 10 or 15% at some point, almost in session. So obviously, insurance prices are high, but for a reason, because those underlyings are moving quite a bit, and therefore you need to be hedged against those. So if you usually trade with IV rank, now is definitely not the time to look at that stuff and say, well, if you compare to a year ago to what happened over last year, which is what IV rank does, right? It says, oh, well, let's look at all the values in implied volatility in SMH for over the last year. And clearly it's high, it should mean revert. So let's just sell that stuff. Well, hasn't exactly been mean reverting over the last 6 months. So you should pay attention to that. Even if you are using VRP metrics at the moment, this is not great, right? Like even if you were to wait moment where eventually you have, I don't know, a gap down in SMH and then you see 10 points VRP, I wouldn't take that trade. Once again, you're trying to edge some movement in the underlying trading. Realized volatility 60 is not for the faint of heart. Things are going to move around quite a bit. 10 points of VRP is definitely not going to help you to hedge a lot of risk, especially if you don't delta hedge. But again, delta hedging works when movements are really continuous. At RV60, it's never continuous. You usually have gaps, and that's really what create and fuel even more realized volatility. So be careful there. The big move on Friday after Kimi was announced, we can totally see it here. 19 intraday, that's not nothing. It's not even the highest that I've seen it over the last 3 months. So yeah, like just be careful in there. It's really not worth blowing up an account. Although on SMH, I mean, you can totally blow up your account on SMH, right? But if I have to bet, people are going to blow up their account on that one. So It's basically leverage SMH, Succel. Very similar trajectory as you would expect because ultimately it's just replicating the return of SMH, but with 3x, I want to say 3x leverage. So you would expect to see implied behaving in a very similar fashion. But where it becomes interesting is the VRP in Succel is much higher, right? The implied is going through the roof at 180, and realize has been behaving somewhat. It's been, I mean, behaving again. It's been behaving somewhat over the last month, right? A month and a half, but it's behaving at 100. So don't make me say what I don't want to say. It's stable, but it's stable at 100. It's not a great situation. The probability to see a gap up or a gap down in Soxal these days, and when I say a gap, it's like a serious gap, right? Minus 8, 10%. We haven't seen that lately, but it's totally possible. You wake up and yeah, position is down 12, 15% in one day. It's absolutely possible when you have realized volatility of 100, 102. And yes, you have 70 points VRP. That's pretty substantial. But is this something you really want to go trade? Yeah, like it's like if you see a mallet of or if you see a luggage full of gold bars in the middle of the highway, should you stop to go pick it up? I mean, if it's real gold bars, why not? But if it sucks all like this, again, I would pay attention closely to it because once again, the market is not stupid. The market is rarely overpaying for insurance for no reason. It can, and I was insisting on this on the newsletter. Obviously, it does, but usually it does, and I prefer at least situation where a shock has already happened. Implied volatility is on the way down. Realized volatility is also on the way down, and then you can pick up pieces for months, sometimes years. Literally, that's what happened with SPY after Liberation Day. It's even better to me when you start to have people complaining that implied volatility is too low. Once again, that was perfectly the case with SPY post Liberation Day, right? Like here you had fantastic days to harvest some great premium, right? 8 points. That was really fantastic. Even though VIX was at 16 sometimes, that's not the case here. We haven't had a shock yet in SMH. And I know that we start to see some big movement. So how do you characterize a shock and when do you start see when do you start what do you need to see to say, okay, yeah, now the market definitely is going through something and and maybe the worst is behind us. So you can always use the very subjective metric of, well, is it front page news of the FT, for instance, or is it big enough so that people really start to pay attention, right? If you see tomorrow SMH losing 5, 6, 7, 8, 9% in one day, or at least just even in session, right? If you see something like this, obviously people will pay a lot of attention to that. It shouldn't be the start of you going selling options left, right, and center. It would probably just be the beginning of, okay, the market is now going through that shock that he was paying option for, so let it happen. And then once it happened, the real objective sign that you should pay attention to is usually realized volatility collapsing and collapsing at fast pace, right? I know that people will look at this and say, well, we've already collapsed, right? We were at 60 early July and now we're at 56, 57. That's not what I call a collapse. This is a real collapse post Liberation Day, right? You go down at fast pace and you go back to normal levels. Here it's probably a mean reverting process happening on something that's been drifting up like crazy. So definitely not what I would call a collapse. Um, does that mean that I'm bearish on all of those semis and AI and stuff like this? Absolutely not. I think that long term, the best again is probably in front of us. Again, like don't. I'm trying to stay away from markets going up or down, and most of the time trading neutral. So don't try to make me say what I'm not trying to say, right? Like if you try to get me to say stocks are gonna keep going up over the next 2, 3 months, I don't know. But if you think that the usage of semiconductor over the next 5 years is at maximum right now in peak capacity, you're probably wrong. So I'm definitely bullish on the sector, but then markets can act in crazy ways and prices in even more crazy ways. So just be mindful of that. We haven't seen a big move in semis. I don't think it's gonna be now. I think it's a little bit early, but um, you never know. You start to have AMD that reports poorly early August. You have Nvidia that reports poorly mid-August. And when I say poorly, it's not even like poorly, oh my God, those numbers are horrible. They're not selling chips anymore. It's just market is not impressed or market is expecting more, and therefore you lose 10, 15%. And I know it's tempting to believe that it's not possible, but we've had a great example during the time of last week or 2 weeks ago with IBM, who lost 20, 25%. IBM is a gigantic company. IBM losing 20, 25% in one day is huge. It didn't make it, it was up in the financial press, and people quickly forget about it because IBM is not hot tech anymore. But could Nvidia lose 25% in one day? Absolutely, especially with realized well this high these days. So just be mindful of these things. Um, the one thing I wanted to show with Succel actually is that our probability numbers have been going down steadily since I would say they peaked. I want to say they peaked somewhere in May. Nope, not SPY. Succel. Let's have a look. Uh, and I just want Succel, not SPY and Succel. Yeah, so definitely, yeah, peaked early June. And I know in the group a lot of people took a lot of those trades, either with short strangles or calendar, probably more appropriate if you don't want to take too much margin. But despite the VRP still being quite high, let me load the dashboard properly, right? Like you have those 80-point VRP, that's huge. Our probability numbers have been going down for most of the month of July because, yeah, this is just normal, right? Well, we're trying to find situation where the VRP is stretched with in comparison to its recent history. So now 80 points VRP is pretty much normal in Soxol. So if you go take a position right now, you're not necessarily putting a trade in something that's abnormally stretched. You're just providing liquidity to people that feel like they need to hedge position in that product, and that at the moment things may be fairly priced, right? So it's a very nuanced situation. It means that, yeah, it doesn't mean you won't be making money if you sell that stuff week after week, but you might have a situation at some point where yeah, like you're gonna have to pay a massive claim and probably lose a lot of money. Uh, anyway, we tend to say that we wait for probabilities in our machine learning models to be above 65, 66%. It's been yeah, since early July that I would say the tides have turned. Was really nice in June, but these days I would probably stay away from that. Um, Yeah, that's about it. And if you, yeah, so just before we stop, I should have shown that before actually. Uh, but if you look at IV rank, it's not exactly IV rank, it's IV Z score, but that stuff is going to show something very similar. You'll see your IV rank, IV percentile, IV Z score. You'll see them blinking red and telling you, oh yeah, like those are great trades. Um, yeah, you probably don't want to do that. It's not amazing. And I know that even if you look at VRP, right, it will still look stretched because you make a comparison against itself over the last 3 months. But I pay much more attention to this and a model telling me like, yeah, these days 60%, 63%, you'll probably be making money, but um, the risk is there for a reason. So just be very careful. That's about it. If you guys have questions, I'm happy to answer as usual. Cool. All right. Well, in that case, I see you all in the Discord and have a good end of the weekend. See you soon.